Okay, good morning, everybody. Happy Tuesday. Welcome to the morning show on Stock Market TV. It's the best morning show in finance. Did you know? Spencer Israel here with JC Parets. Man, we got a lot going on today. We got a lot to discuss. We got to talk about these European banks, which we definitely talked about yesterday. Seemingly every day, it seems like. Maybe not, but it feels that way. We got to talk about these Chinese stocks from yesterday, right? Alibaba, Neo this morning, all of them catching a bid yesterday. We're going to talk about earnings as well. We have, I don't know, like 50 or so earnings reports this morning. We're not going to get to nearly that many. Don't worry. We'll get to like 4. A lot on the radar as far as guests today. Mike Siccardi will be on this show at 9. Kimmy Sokoloff at 9:15. Patrick Dunawilla from the Chart Report at 9:30. And our very own Mary Thwaites after that. So very full schedule today. Good morning, chat. Good morning, Ken, Jason, Joe, Elijah, T-Core. I hope I'm saying that right, T-Core. Good morning, everyone on Twitter as well. If you want to hop on over to our YouTube chat, that's where we, chat and answer questions and do all that good stuff. So that's the show. Here we go.
Good morning, Spencer.
What up, sir?
Oh, just doing a little trading this morning and then playing some golf today. Am I such a golfer now?
We both got the polo going, the rocking the collar. I guess that means we're dressed for golf.
If I don't dress the part, they kick me out of the club. I wouldn't be the first time.
What's your tee time?
11:40.
Okay, I thought tee times were always like super specific.
Right? Yeah, 11:40.
Well, I guess that is okay. Yeah, I meant like 11:41. You know what I mean? Or
nope, 11:40. 11:40 tee time. Yup. I'm going. Right. I'm actually with a former banker at SBNY. So I'm gonna get some deets. I'm gonna get some deets on what happened. I've already heard some rumblings, but 18 holes and a few beers. I'll get them talking. I'll come back with a few.
All right. Well, you better get it in now while you can, because summer is more than half over. But let's not talk about that. Let's talk about the market here. Let's do some state of the markets. We got a lot going on here. So let's get the charts up on the screen. Here we go.
Listen, I think that we should start with Bitcoin. We'll just do that quickly and then move on to some of the other things that are standing out. How do we not start here? Bitcoin breaking down to new 30-day lows, breaking this long consolidation. It was being called a bull flag, maybe, consolidation with an ongoing uptrend. It ain't any of those things. After they failed 4 times to break out above 31,000, that was too rich for my blood. I was like, all right, I give up. I'll just wait. And patience is paying, my friends. Patience is paying. I think patience is going to continue to pay. We're looking for a big volatility move, with volatility contracting so much. That volatility expansion, I didn't want to get in front of that train. I've been in front of that train, and it ain't no fun at all. So it's nice to not have a horse in this particular race and just sit back waiting. For those of you who think that this maybe is a failed breakdown and we're about to rip, because we've seen that plenty of times in cryptocurrencies over the years, where the big moves really start out by a whipsaw lower. I think Ethereum gets you done. This to me is probably going to be a good tell. If Ethereum breaks down here, well, that's going to be further confirmation. Think about it like Dow theory confirmation, where you got the Dow Industrials and the Dow Transports. Think of Ethereum and Bitcoin like that. Bitcoin broke its support. Now, is Ethereum going to do the same thing and confirm that, or are we going to get a bullish divergence that's going to hang in there? Bitcoin comes back, and then we rip in the back half of the summer. That's entirely possible. I really don't care either way. Ethereum and Bitcoin can both go to zero tomorrow. Doesn't matter to me. Or they can go to the moon, as the kids say, and that's cool too. I'm good either way. As long as I'm on the right side of the trend, that's really all I'm interested in. It's a very selfish endeavor.
Mhm.
This whole investing thing. I'm only interested in my own portfolio, and I don't really care what happens after that. And then speaking of my own portfolio, I got to tell you, European banks were one of the reasons we were so bullish in October of last year. Like we were already bullish, like we were already in the camp that the bull market had already gotten going. And then here come mid-October, and European banks are showing outperformance. Here we are, European banks making new 52-week highs. Spencer, I was promised a banking crisis. Instead, I'm just getting face rippers. One of the strongest bull markets of all time, and now you got European banks making new 52-week highs. What, you don't see that every day.
I don't know if I'd call this one of the strongest bull markets of all time.
Well, strongest first half to the Nasdaq ever.
All right,
So
that's better. Yeah, I mean,
the
yeah,
Dow Jones Industrial Average is
but
3.9% from new all-time highs,
what I'm curious though
1,400 points.
is not so much the European banks, which is just Europe in general, right? Because much has been said about Europe or America being the only game in town, right? So how are the broader European markets doing compared to the Dow, for example?
Well, the Euro Stocks 50 is making new 52-week highs,
There we
right?
go.
So what do you want? And when you look at the components of what's going on in Europe, I think that that's a big one. You look at the components, industrials represent 14% of the Euro Stocks 50, which is almost double what it is in the United States. Technology is only 16%, so a fraction of what you have in the United States. That's probably the biggest difference. You got some more consumer discretionary out in Europe as well. Other than that, maybe a little less healthcare in Europe than you have in the United States. But the big differences are technology and industrials. That's flipped on its head. A lot more industrials in the United States, almost double compared to Europe, and a fraction of the technology exposure. So here we go. Europe making new for the European financials making new 52-week highs. And then I always like to look at some of the components of these indexes and some of the leaders. Look at this Swiss insurer, Zervi, $72 billion company. Look at that monster base breaking out, pushing up against new all-time highs. And then, of course, UBS. Look at that base right there. Monster base. They got stuck with the bill, that Credit Suisse bill. You see the other day, Credit Suisse downgraded some company. It's like, who the balls on this, who are you to downgrade anybody, right? I mean, are you kidding me?
I just saw that UBS is paying what was it, a $400 billion, not $400 billion. The Credit Suisse. Remember the Archegos mess from a couple years ago? I think UBS is paying the 268. Sorry, I was off by only like a bunch of zeros. $268 million fine. That UBS will pay because on behalf of Credit Suisse for that Archegos mess.
Got it.
Okay.
And then the one that we own here is HSBC, for obvious reasons. And if you're new around here, we like to see relative strength. And the fact that HSBC was already making new 52-week highs months ago when we put this trade on, with volatility so cheap, this trade continues to pay dividends. Hey, this trade keeps working. Certainly a leader. It's also the biggest component of the European banks index. Something that might throw a little wrinkle in this rally, I think, is the U.S. dollar. Take a look at that. The U.S. dollar breaking down severely over the last few quarters has certainly helped keep a bid on stocks in general and risk assets. And if this is a failed breakdown in the U.S. dollar and we start squeezing above 101.5 on the U.S. dollar index, I would argue that's probably not a good thing for stocks. That could be somewhat of a headwind here in the back half of the year. So something that we're definitely monitoring is that U.S. dollar index. See if it can get above 101.5. If it does, I don't think that's going to be a good thing for stocks. And then finally, have commodities finally bottomed? That's really the question. Grant today on the chat was like, hey, was that it? You got bonds peaking in 2020, and then stocks peaking at the end of 21, and then ultimately commodities peaked last year. And then you got the bottom in the bond market. You got the bottom in the stock market. Now, where's the bottom in the commodities market? Have we seen it? Sentiment towards commodities is down in the dumps. And then I just wanted to show this chart just to show you, if you're interested in what's going on in inflation, just look at the bond market. You You don't have to listen to these clowns with their CPIs and their PPIs and their PMIs. And there's just so many letters. Like, just stop already. You can just see what the bond market is pricing in for inflation. These are inflation protected treasuries relative to nominal yielding treasuries. And then I overlaid crude oil on top of that. So you can see that, guess what? They look the same. So the question is this transitory after all, or are these lines going to be heading higher? My suspicion, my bet actually, is that they're going to be heading higher. Take a look at the energy versus technology ratio there. If this thing starts to get going, which it has over the last few days, and energy really becomes a leader in the back half, I'm thinking that crude oil and those inflation expectations from the bond market are probably rising. And I said that I was going to add to my Chevron position yesterday. I did. As long as we're above 150, I continue to like this one long. We own the January 170 calls. I added to those yesterday. Trying to flower my water, trying to water my flowers, and cut down the weeds. Fortunately, I don't have many weeds right now. I guarantee you I will, but right now, just watering the flowers, adding some Chevron, no big deal.
No big deal. Yeah, I talked about doing some buying, and then, as usually happens with me, the day I get sidetracked with other things, and the day gets away from me. So we'll try to actually do some buying today. Okay, that
What did you think of the
was.
state of the market? Was that as good for you as it was for me?
It was wonderful. It was wonderfully concise, and
For once in my life.
for once in my life, once in your life. That's right.
These guys are ready to come home. For those of you who don't know, Steve
Oh my
Strazza and
gosh.
Sean McLaughlin still in Asia, still there.
But they come home tomorrow.
They come home tomorrow for us or tomorrow for them?
Yeah, I don't know.
I think it's tomorrow for them. I think it's today for us, actually. Either way, they're ready to come home. Strazza
but
said,
they land tomorrow for us.
is that what it is?
Maybe
I spoke to Strazza and Giancarlo last night. It's been a long trip. They've been working hard. They've been eating very well. They're ready to come home. So for those of you, if you want to put the link, for those of you who have not signed up for early access to the docuseries that they are filming out there, talking to some of the best traders in Asia, in all of those countries, 7 different countries. They were at Jim Rogers' house hanging out a couple of weeks ago. They were at the Malaysia Stock Exchange. They were at the Philippines Stock Exchange. They're currently in Tokyo. They just got back from Hong Kong. They were in Bangkok, Ho Chi Minh. They really miss Saigon. They really like that. That seems to be the favorite. Didn't see that coming.
What do the locals call it? They call it Saigon?
I would imagine. I mean, they just changed it to Ho Chi Minh like not that long ago.
Okay.
Like kind of like Bombay. Like, it's called Mumbai, but like a lot of locals still call it Bombay. It's kind of like that.
Yeah. All right, well, guys, I just dropped a link in the chat. It's pinned there. It's also in the description. Wall Street to allstreets.com. Click on the link there and get early access. And hey, come hang out with us when we do these watch parties, because they're going to be a lot of fun. All right, 8:45. We're going to have our first guest on in about 15 minutes. Let's do what's moving. Let's talk about some movement from yesterday, because we had some movement intraday, and I want to cover that. And let's talk about China here. Speaking of Asia. I never really understand these headlines that come out of China, just to be totally honest with you. But I understand what they do to the market, right? And the market loved the headline yesterday. I guess there was a meeting of some big Chinese governmental body, and they signaled their support for their own economy. Great, I guess. So anyway, every single Chinese stock that trades in the U.S. was trading up yesterday. Alibaba, Baidu, JD, Neo's up again this morning. XPEV, you get the idea, right? They were all up intraday.
FXI's up another 2% pre-market.
There you go, right there. So yeah, this was like a governmental headline, right? Like they're gonna support their economy. Yay, I guess the opposite of what they did a couple years ago. I don't know. Whoa, let's fix that chart there. So that is, thank you. Their Politburo, which I guess Wavy says that's their bazooka. Not quite sure what that really means, to be totally honest with you. But I know the market likes it. Market must get it because I certainly don't. But we don't really care about that. We just care about the price action. As my
Yeah.
chart
It's
there.
interesting that China continues to catch that bid. It was a major underperformer. So when we're looking at that rotation, we've gotten the rotation into things like industrials, financials, small caps, starting to see that now in China. Really, really interesting.
Yeah. And, it's been so.
Throw the China chart up. What's the problem?
I'm trying. Hold on. I'm doing like four things at once. I was going to say just I don't know. I still have PTSD from a couple years ago in China. Like just like the K Web, the ETF. Can you see that? Is that blurry for you?
No, why is it so blurry? What's the problem?
Maybe I think Fawn is having some internet problems
Put
here.
it on yours then.
I am. Give me a second.
So if you recall, last year, China stocks were the first ones to bottom. They were bottoming out like in April, right? Which was really, really interesting. March and April, these things were bottoming out. Then they made new lows. If you look at the FXI, made new lows into the fourth quarter. But they were already showing relative strength early on. Then they kind of gave that up. And now they're coming back. So this has just been a longer bottoming process, is really what it's been. And then here's the K-Web. So this is Chinese internet, very specifically. And this 26.5 is a big one. We've been pointing to this for quite some time. And if we're above that, the risk is to the upside. You can't be short these things. And anybody who came into the year short these growth stocks, China or otherwise, is gotten their face pounded in. I mean, this is just not the type of environment where you want to be shorting growth stocks. It's just, tactically, yes. Over the last couple of weeks, looking at fading Netflix and Meta and a few of these others, sure. But they came into the year with such high short interest, like the Carvana, another great example. Like this, the perma bears just get so angry with Carvana going up every day. They're like, how could this be?
We
Up
have
like
the
1,300%,
same chart, right? CQQQ and KWeb, they do the same thing, and the charts looks the same for that reason.
Yep.
So yep,
It's Chinese technology. So all right, so China came out. They made a big stink about something that they're maybe doing or maybe not be doing. Maybe they're lying, making up the whole thing. Doesn't really matter to me. They probably are. But the stock market likes it. If BABA starts getting above 120, granted we're still below 100, so this thing's still in a range. We start taking out 120 to the upside. Squeeze is on there, Spencer. Squeeze is on.
Can you squeeze a? I don't know what Baba's market cap is, but I assume it's high in the hundreds of billions.
Yeah, you can squeeze it. Did you see Meta in the last 9 months? What the hell do you call that?
I don't know. I associate short squeezes with like smaller companies, smaller.
No, man. No, because the
Yeah.
short squeeze doesn't necessarily have to have high short interest. It's also a large percentage of portfolio managers that are not in it. So they might not necessarily be short and unwinding. They just might be underexposed. So
Yeah.
technically, maybe that wouldn't be a short squeeze per se, but it's the same phenomenon. It's either I'm short and I need to cover, or I'm not in it, or I don't own enough. Like either way, it's forced buying.
Yeah. Yeah. All right. That's fair. That Neo chart, let me bring it back up. That Neo chart is wild, man. Has there been a more volatile stock in the last, I don't know, 5 years than this one? It was so in favor. Then it went to like $1, right? In COVID. It went from 1 to like 70. Now we're down at 11. Like, just anyway.
Now's the time to accumulate, Spencer.
Maybe.
Listen, if you don't have enough Chinese electric vehicle exposure,
I got
maybe
nothing.
this is the one for you.
I got none, I'll tell you that.
You don't have any Chinese electric vehicle exposure. This is $20 billion. Shanghai, $20 billion.
I don't have any. Once I sold my KWeb. Let's go back to the KWeb chart. I sold the KWeb. I'll tell you when I sold it. I sold it.
That red frowny face up there.
No, oh gosh, no. Of course not. I sold it like looks like like in early 2021. I sold it, right? So we had already come way down. I rode that thing all the way up and like halfway down, and I was like, I can't do that anymore.
That was before you were working with us, clearly.
Yeah. Well, yeah. But I left such a bad taste in my mouth. The whole the fact that the government could just decide to not support and then support their own economy, their own industry. Just I don't know. It left such a bad taste in my mouth. So
Well, too bad.
Yeah. I guess too bad for me. Too bad for me.
Nobody cares.
You're right. Nobody cares.
Try harder.
Try harder. Oh wait, here's one I wanted to bring up. That TAL. Again, the Chinese government said they were gonna basically kneecapped the for-profit education industry, which is what this company does, right? They kneecapped it, and somehow we're up. Like year to date, we're up.
Yeah, Strazza loves this one. He was actually texting me from Asia, telling me how he's buying this one. Listen, it looks good. If we're above 675, right now we're at 655. If we start creeping back above that 675, I mean, you can even argue that 6 level is a big one. That former resistance level at 6. Like, there's a couple of different ways to play this. Here's MNSO.
Same. I don't know what this one is. I have to.
It's a retail, Chinese retail.
Okay.
Yeah.
All right.
You wouldn't know any of the these brands. This is,
all right.
Yeah, this is like Chinese stuff, like Chinese little figurines and collectible dolls. Like this is not. They don't have those in New Jersey.
No. Well, maybe where I live, but all right. Yeah. I look. It's hard to argue with the charts, right? It's hard to argue with that. I mean, as down bad as they all were, I mean they're forming at the very least they're forming bases. So
this is a $6.5 billion stock, and what's that level there? MNSO. Let's see what that. I'll give you that number.
It's at 20 something.
The level right there. Yeah, hold on.
19 something. I don't know.
Hold on, let me work my magic. I'm looking at 18 and a half. I mean, 19, 18 and a half. If we're above there, you can buy as much as you want. Understand, especially if you're in America, that these are ADRs. So you've got some gap risk, not to mention the things that frustrate Spencer Israel about trading Chinese stocks, that the government can just come in and do whatever the hell they want. So, you know that going in. So just kind of keep that in mind. This is the occupation that we have chosen, Spencer Israel. So we are putting risk on, knowing that we are trying to make the best decisions we can with incomplete information. This is just the truth of the matter. It's not about avoiding risk. It's about putting risk on where appropriate, where we can manage that risk as best we can, whether you're doing that through options, whether you're doing that through stop losses, whether you're doing that through diversification or a combination of all of those things. That's really what it's about. It's about understanding that we're going to put risk on. We're going to take risk. That's what we do. We're going to be wrong, and we have to be able to admit defeat and move on and not be stubborn. I mean, imagine being a perma bear. Imagine like every night having to go to sleep, like being like, I'm just such an angry old man that I'm just going to lose money every day. And anybody who listens to me is going to lose money also, just because I'm too stubborn and my ego is so fragile that I can't get past that. Just imagine being that guy. Like that must be torture.
So, that guy being like Mike Wilson from Morgan Stanley.
I don't know who that is. I'm not talking about anybody specific. I'm talking about just kind of like in general. Like not like this one guy. Like I don't know who this Morgan Stanley guy is. They still have analysts at Morgan Stanley?
He's the chief U.S. equity strategist at Morgan Stanley. He's perma bear. He was a hero last year, and he just threw in the towel. He said he was wrong.
No shit.
Hey, credit to him, man.
I guess. I didn't know Morgan Stanley still had analysts. I didn't know that was the thing. But all right, so this guy, so he was a perma bear, sell-side analyst, perma bear. Those guys don't last long on Wall Street. The perma bulls on Wall Street tend to last longer because they're eventually going to be right. The perma bears, you're going to be looking for a job real soon.
Yeah, maybe. Well, he said I was wrong. The market went up. I didn't call it. Let's do some earnings real fast, and then we'll bring on today's guest. We got a few here.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Let's start with Spotify here. Always confusing because they report in euros because they're a European company. But their earnings per share missed badly. Their revenue also missed, but their total monthly active users came in above estimates, and they actually gained 36 million um, users in the quarter, which represented their largest net addition in the company's history. So their users went way up, but the margins for those users went way down. That's what's weighing on the earnings number here. So a bit of a mixed bag in this report. The stock was down this morning last I checked. Let's check it again right now.
Yeah, it's down
It
5%.
is, yeah, it's down, but it's off the lows. So yeah, again, mixed bag. Obviously Wall Street wants to see profitability, which it does not have on an earnings per share basis. But at least they're gaining, and they also announced that they're raising prices. That
How
was
do you know
yesterday,
that
right?
Wall Street wants profitability?
I mean, maybe in a more contractory environment, it does. Definitely last year I want to see profitability because when markets go down, when stocks go down, growth goes down the hardest. And if you can show that you're less speculative and you have more bottom line stability, the market likes to see that because every time a growth company says, like, look at Uber, for example. The last 3 years have all been, hey, profitability, profitability, profitability. Well, look at us. We're doing it. The market likes that. So there's a time for growth and a time for
Yeah, that's fair. There's
profits.
a time and a place for everything. I guess maybe in this environment, maybe they want to see a little bit more profitability. I'll give you that one, Spencer.
Yep.
I'll give you that one.
All right.
Below 160, though, you can't touch it. And I just want to reiterate something that this continues to be a market. And this is something relatively new where we have winners and losers, right? And I think that the correlations among components of the S&P 500 continue to come off, and it's not one of those things where everything goes up or everything goes down. There's winners and losers, Spencer. I don't know if you've ever heard that it's a stock pickers market. Have you ever heard that? Well, this is what they're talking about, in my opinion, and maybe less of a stock pickers market and more of a sector pickers market, I think, is what we have here, what we're going to continue to have. And as investors, I think we should expect that for the rest of the year, from what I can tell, until proven otherwise. I think there's going to be winners and losers, the old-fashioned way, like the good old days.
This one was the IPO was a direct listing, so this is one that you definitely, if you are into that sort of thing, you definitely want to have the IPO price on your radar because that's the IPO price. The IPO price is the true IPO price in this case because they didn't raise any money. So the price that this thing opened at is the price from that. Is 130. It's the reference price, right? The first share traded at 165. Reference price. Wow, we are right there.
Yeah, still a lot of market memory going back 5 years.
Oh yeah.
Based out of Luxembourg. Right. That's not shady.
No. I think it's a Swedish company.
It's based in Luxembourg. Is Luxembourg in Sweden?
I think
not,
no.
Spencer.
No. It's based in Sweden.
It's based in Luxembourg. It's in Luxembourg City.
I think it's based in Sweden. That's Daniel Ek, the founder and CEO, is Swedish, so I'm like pretty sure it's a Swedish company. But whatever, we're not going to argue.
Based in Luxembourg, bro. I don't know what to tell you.
All right, maybe they had more than one headquarters. What can I say?
I doubt it.
All right. Whatever. All right, let's bring on today's guest, Mike Zaccardi. He's here. He's got charts. Let's go.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mike.
What's up,
hey,
Mike?
Spencer. Hey, Spencer. Hey, JC. What's going on?
Oh, just looking at markets. Nice little bull market. How's it treating you so far? You doing all right?
Yeah, man, doing great. We got some exciting intermarket action going on right now. I'm loving it.
Well, why don't you tell me a little bit about what's got your attention on the intermarket side? I like how you're just going right into the intermarket stuff. You know the way to my heart, Mike.
Oh yeah, that's it. We go back on Twitter. So yeah, I think this move in commodities right now is pretty legit. Like we've got DBC, the main commodity ETF, breaking out above its 200-day, breaking out above some recent highs in the last couple of months. And to me, what's really cool about this move from an intermarket perspective is that, we've got the dollar rebounding now, potentially putting in what you mentioned earlier, a bullish false breakdown. And to me, that makes the move in commodities even more impressive. Like, we got oil, copper in rally mode, even with a stronger dollar. So to me, it looks like some of these energy stocks are not a bad place to be. You look at sector-wise so far this month, in the second half, we've got energy, financials leading, and tech, communications are the softer spots. So there's definitely a lot of stuff going on under the surface that traders need to be paying attention to.
What kind of energy stocks do you like? Oil services? You like the drillers,
I think
refiners? Where's your head at?
Yeah, the services are always like your risk-on area, right? When oil's rallying, that tends to be where you get the most beta on oil moves. Pretty good numbers from Chevron Sunday night on the integrated side. So it seems like most things are working. If we do if the dollar does kind of keep perking up, maybe stay with some of the U.S. Oil and gas names. But most areas in the sector are working pretty well right now.
What about the metals? Are you interested in the base metals, the precious metals, neither, both?
Base metals look better, I think. We got Freeport moving higher this morning. That's not looking quite as bad. The precious metals, we got gold just hovering below 2,000. It had every reason to rally when the dollar pulled back under 100, and it didn't do it. So, and we're also entering kind of a seasonally weak stretch for like GDX and GDXJ, which I've been writing about a little bit. So those aren't too impressive. I still think the industrial metals still have something to prove, but the move lately in copper is kind of interesting, I think.
Mike, you were throwing a little bit of cold water on the party in the Dow rally. Why?
Well, hey, it's impressive. We're going for TB12 in a row today here in the Dow potentially. So we'll see what happens.
Did you just say TB12?
Oh yeah. That's the only reason it's going to be coming up in discussion right now. So why not throw it out there? United Healthcare really helped to bring that about. So yeah, there's the chart of the Dow. In the last 11 days, it's been a nice little rally, makes a nice headline in the financial media each afternoon. But over that time frame, it's only up 5%. 5% over 11 days, nothing to sneeze at. But you can see up at the top of that chart there is the 11-day rate of change history. So 5% over 11 days, it's actually pretty normal, even for a kind of a low volatility index like the Dow. So it's really indicative of kind of this low volatility environment right now, just kind of bleeding higher, which, from a bull market perspective is exactly what you want to see in the summertime.
You think that it's a low volatility situation? For me, it's a sum of the parts and really the exposure that the Dow Jones Industrial Average has that other indexes don't have. So the Dow Jones Industrial Average was the leader off the lows last summer, while the NASDAQ, for example, was still struggling because of all that exposure to technology. The Dow has a lot less exposure to growth and technology, and a lot more exposure to some of the more value-oriented areas that were the leaders in the back half of last year. And then this year, the Dow's been the laggard because it doesn't have as much technology and growth exposure, something like the NASDAQ or even the S&P, and those have been the leaders. And now that as we've been getting rotation over the last couple of months, the Dow's the one that's closest to new all-time highs, 3.9% from a new all-time high. That's 1,400 points. That's nothing. You and I have seen 1,400 points in a day before, right?
Yeah, and it gets into this whole notion of rotation. On a longer-term basis, I think we tend to get, traders might get psyched into thinking about rotation on like a week-to-week basis, but you stretch this out over months and quarters. We had, equities bottom out, most of them in June of last year. We had some of the defensive and the staple stuff rally in the back half of last year, and then the growth trade took off, and now we're seeing kind of a reversion to the more defensive areas, but also throw in some of the cyclical stuff with financials and energy taking place. So, bigger picture, some of these rotational moves I think are healthy for the market, even though they can kind of frustrate some of the folks really focusing on a few sectors momentum wise.
Mike, with financials and small caps and energy catching a bid and some of these commodities, is that pointing to higher rates?
Yeah, I mean, you look at intermarket wise, we have all the inklings that a lot of areas that tend to do well when rates rise are now seeing that. So yeah, I mean, I would agree with that.
But the large speculators, like the dumb money, the large specs have like crazy shorts on bonds, man. So like, the intermarket relationships are telling you one thing, sentiment is telling you another. So I'm kind of like hands up in the air, right?
Yeah, and I think you look at the narrative right now. The narrative in the media is that the Fed's almost done raising rates, inflation's under control, and it seems like for the first time in a while, there's this sense of, all right, we're kind of moving on to the next thing here. But now we're getting price action saying something a little bit different. We've got, bond yields ticking back up, inflation expectations moving back higher, along with the move in commodities, which you mentioned earlier, overlaying that chart of inflation expectations with commodities. So that could be kind of the second half thing. And it's not like that has to be an overly bearish thing, because, we can see certain stocks trade sideways, like the Magnificent Seven, while
that's the dumbest shit I've ever
higher.
heard. The Magnificent Seven. Are you kidding me? Who came up with that stupid nonsense?
Oh boy.
Dumb.
I think the guy talking on TV right now on the other channel. But yeah, one separate one.
The Magnificent Seven. Get out of here. I can't.
Well, we got to find like some other, you had FANG, Diamondback Energy was kind of the counter to the FANG. We need to find something else for Magnificent Seven that can kind of be the cyclical angle to that. So
you know what I'm taking? I'm taking the back half of the year. I'll take the field. You can have your Magnificent Seven or whatever it is. I'll take the field all day. Mm-hmm. By the way, those Magnificent Seven, they weren't really that magnificent. They were a lot of them were underperforming a lot of other stocks. Like I think only like 3 of them are in the top 20 performers out of large caps. So like I don't know this is dumb.
Mike, can I ask you? So on a chart like EWZ, for example, which you sent over our way, right?
Yep.
So obviously, that trend is pretty clear. But now, what do you do here? You might look at this and say, gosh, I should have bought a 25. I missed 26 or 27, whatever, and now it's 33.
I mean, Spencer, this thing's done nothing for 15 years. I wouldn't say you missed it.
Well, I'm looking at a 7-month chart here. That's all. That's what's on the screen.
All right, look at a 20-year chart and tell me if you think you missed it.
No, of course. I know it hasn't gone anywhere. I want a Mike's take.
Yeah, so EWZ has kind of been a widow maker in a lot of EM areas, right? But multi-month highs. We've got the 50-day above the 200. If you're looking to buy this on any kind of a dip, we do have that gap there from a couple of days ago. But I think in general, when you see Brazil outperform, you've got a lot of the miners in there, a lot of copper exposure, PBR, some oil exposure. So it's just another kind of arrow in the quiver of this commodity rebound that the market seems to be sniffing out. So that's why I think we can kind of pay attention to what's going on in Brazil right now for implications kind of in a broader sense with other asset classes.
I want to talk about what's in Brazil. To Mike's point, it's 17% energy, for example, compared to the S&P 500's 4% energy. The Nasdaq is 0% energy. So Brazil, EWZ, 17% energy, 25% financials, which is almost double what it is in the United States. So that's a big difference. 17% basic materials. Just an FYI, just to put things in perspective. The S&P 500 is 2% basic materials. The Nasdaq is 0. Brazil also not a lot of consumer discretionary. The United States has way more. 0% technology in Brazil. 12.5% industrial. So you got a lot more industrials, but it's really the energy and materials are really, really the big difference in this particular index with no technology. So very, very, very different than what you're seeing in the United States.
And that explains the underperformance for the last 15
Hold on,
years.
before we let Mike go, Mike, are you doing technical analysis on weather patterns? What are you doing over there, bro?
Yeah, it's been known to happen. Weather, finance, they go right hand in hand.
Why are you so into weather?
That's just how I'm wired. It's like a trader. He's just wired for certain things, and
You're just into weather patterns.
Some people love the weather, man.
Yeah, it's all the same thing. We got all these pieces of evidence, right? We got to weigh everything together, come up with a probabilistic forecast, and there's no absolute predictions going on. It's all just weights of the evidence and going with that. So that's why I love it.
Are you going to be like this Morgan Stanley guy? Be like, oh, oops, sorry, I didn't see that hurricane coming.
Well, yes, weather people are the original oops, we got it wrong people, and we all know this.
Yes. Economists and weathermen, they go to the same school. Is this going to be like the worst hurricane season ever? I heard. I'm hearing rumblings. Is that true?
No, it should be all right. Definitely not like we've seen the last couple of years. I think it'll be fine.
Are you playing golf these days?
A little bit. I get out there every now and then. So
I'm ready to go. Do I look like a golfer?
I know you got your 11:40 tee time all ready to go. I just tweeted out some golf stats that I saw from Callaway. So it looks like we have some good trends there too.
How about this GOLF?
Which one's that?
That's Acushnet. This is the Titleist.
Oh, okay.
You don't know this one?
Pull up that chart. Let's take a look.
Oh, I'm gonna pull up that chart, boy. Oh, let me just finish marking it up here.
And then I never remember MODG. That's Topgolf Callaway now.
Well, they used to be ELY, Ely, which was the founder.
Right. And I forget. I always forget that they changed it, and I can never remember the new ticker.
Go up slide 1 there, Spencer.
MODG. It looks kind of the same as a lot of other stuff out there.
Look at this one, Acushnet. This is the company that owns Titleist. Look at this bad boy.
Nice. There we go.
Come on. How many charts do you know look like that?
Yeah, that's a beautiful draw down the fairway, in my view.
Oh, it looks nothing like my shot. Man, let me tell you something, Mike. I am one terrible golfer. I am an embarrassment to the sport of golf.
Well, a few extra beers will be the.
Would you agree that if you take the cart, it's a game? If you walk it, it's a sport? Do I have that right?
I don't know. I mean, I'm sure Tiger uses a cart all the time now. So
you think?
Yeah, you can barely walk. So yeah, probably.
That's fair.
All right.
What do you think? Is that a fair way to put it? If you walk, it's a sport. If you ride, it's a game.
I'll go with that. You definitely get some steps in walking in this Florida heat.
Dude, it's gonna be hot as shit in the Northeast too. All right, Mike. Listen, let's do that again. Let's do this again. This is fun.
You betcha, guys. Thank you.
Adios.
All right. See you, Mike. All right. Let's bring on Kimmy Sokoloff. She had another good day yesterday. Surprise. Stop me if you've heard that before. But don't stop me.
Kimmy.
Hey guys. Hi.
Nice trade there on the Valero yesterday. Pinduo Duo. I like it.
It kept going, Valero. I was like, okay, and then now it's pulling back in, of course.
You know, Valero to you, I mean, that's your refining stock. Like, do you trade any other refiners, or Valero your go-to?
Yeah, I go to Valero a lot, but I recommended XOM in the room at like 105.14 for a move to like 106 to 106.20, and a trader did take in the room, so that was good. I said, hey, if you don't want to trade Valero, you could trade XOM, and it popped up to 106, so I had alert there. So that was good. I mean, that's not necessarily refining, but I go to VLO because it has nice movement, but these oil names give it back like as the day goes on. I watch Oxy to see if it gets above the 200 day. It's one of those that has not gotten above it. So we'll see. It might not be today because they've had big moves and might consolidate, and then maybe it gets going,
So you like this Qualcomm building a nice base going back to last fall? Nice big base in this Qualcomm, huh?
Well, we'll see. These are it's like 3M had earnings this morning, but look at 3M. I've watched it. Some people in the room, I recommended it, traded it. Now it's above the 105 area that was stuck at, but that was earnings. Now, can't really tell because it reported today, whether it holds that gap or not,
3M's an interesting one, Kimmy, because it got down to support. Throw up their slide 1 there so people can see what Kimmy's talking about. This has been one of the bigger losers of industrials, one of the bigger losers of the Dow Jones Industrial Average as well.
Yeah.
But look where it's coming down from. This to me, I think you could buy this all day against those former highs. Now, Kimmy, of course, has a much shorter time horizon than I do, but I love to put Kimmy's ideas and Kimmy's trades into perspective on multiple time horizons. It just adds more validity to what she's looking at here in the near term. You got a major, major catalyst here with that former support.
Yes,
former resistance, I should say.
Yeah. So, it looks good. Just today's earnings. So sometimes it trades weird, either it's going to dip back down and fall back into the channel around 105, 104, or it's going to hold around 105 and then bounce back and then, go full speed ahead to maybe 110, right? It's hard to tell on an earnings day. You could get whipped. So, it's almost like a 50-50 chance that you do well today if you took the trade.
How are you thinking about this market environment where perhaps at the index level, we could be trading sideways, maybe even down with some selling pressure coming in out of those growth stocks, out of those NASDAQ names, but
Right.
with the bid that you're seeing in financials and in energy and materials and some of those other areas, we could be in an environment where there's huge winners under the surface and the indexes aren't doing much. How are you thinking through that sort of environment?
Well, things are popping on my screen, right? So, you see, I venture in other areas, right? So I'm also looking at yesterday. I said in the room, I go watch tech, TECK. I said it's hitting the 43 level, big resistance. Now, will it hold it and really push through? It is gapping up today. We'll see how it trades. Freeport McMoran, FCX, sitting there around the 40.
Call it Freeport McMoran.
McMoran. That's funny.
I like it, Kimmy. I like it.
Also, look at the Chinese names yesterday. I was in PDD from last week and it went against me, but I love the pattern. I said, guys, I understand if you have to stop out. It looked like it was going to go. It reversed. I said, I'm going to stay with the trade because I like the pattern. It could fail and I like the pattern. And then it started to bounce yesterday. My trigger was 78. I said, guys, if you stopped out last week or you never took the trade, it's at 78. It could run back to 80 where my original target was. So some people in the room took it from 78 to 80 or 78 to 79. I said, you could take a buck in it or you could try it, see, hold on to 80. So they caught that. I also recommended Baba. I said, Baba's moving, take any one of them, I don't even know what the news was. I was like, what's going on?
Don't worry. We read the news and we didn't know what it was either.
We also don't know what the news is, Kimmy.
Nobody knows. Fortunately, we don't care. Neither. I feel like Spencer cares a little bit. Me and Kimmy don't care.
On PDD, it was like ding, 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 ding at 78. I go, guys, I don't know what's going on. I said, but if you had to stop out of PDD or you never took the trade, here's 78, or you could add to it up to 80 or 79.
Something like the communists in China are slightly less communist now or something like that until they change their minds again.
Yeah, that's the problem with trading news flow is you really have to be so quick in interpreting the news that
right. And meanwhile, it was just my alert.
So Kimmy and I just let the market interpret the news for us. That's good enough for me.
Yeah, it's extremely
difficult. I know, exactly, extremely difficult. So,
all right, guys, Kimmy Sokoloff trades the open every single day in her own room. She calls out her trades. She gives you ideas, and she has winners every single day. If you want to join her room, there are several ways to do so. You can click on the link in the description. You can click on the link on the screen, or you can scan the QR code on the screen right now to join Kimmy's room. Kimmy,
have a good day, guys.
Okay.
All right.
Bye.
All right. Today might as well be unofficial Dow earnings day, Dow index earnings day, because we have earnings from Dow Chemical, Verizon, 3M. Who else from the Dow reported today? I think that's it, actually, just those three. But so anyway, it's slow, stodgy stock earnings day right now. Let's look at a couple of these real fast. I know you got to hop in a second. Let's take a look at, and then we had GE, which is an honorary Dow member because they were in the Dow for 100 years or whatever. But let's start with Verizon here. top line beat, top line miss, bottom line beat for VZ. Do we have that chart up on the screen? Can we get that up? And we'll rip through these real fast. Not really moving too much in the pre-market. You have thoughts or just dead money?
I mean, this thing's a real piece of shit is really what it is. I mean, this is we're in a raging bull market and this thing can't get going. Like, I mean, did it not get the memo that stocks are going up? So we talked about this a couple of weeks ago because it was getting down near some important levels. So the question is, okay, so we got that bounce. Listen, if we're above 34 or something like that, you want to play for a mean reversion, I think you can knock yourself out. Pays a huge dividend. So on a total return basis, it looks way better than this. Listen, look for a trade back into the low 40s or something like that. Looking for some rotation. It's probably not the worst idea I've ever heard, but just understand what this is. If you have too many trades that are really trend following and you want to add some mean reversion for a little bit of diversification, I don't hate this idea, but you really only can be long if you're above those June lows. If we're not above those June lows, you can't touch it.
Similar type of chart here, 3M, earnings beat for them, sales beat, and a guidance raise. They raised their guidance by a whopping 10 cents for the whole fiscal year. So whoop-de-doo, I guess. Better than a guidance miss.
Yeah, but it's bouncing off, like we said, throw up that chart. There's slide 2. It's bouncing off that key support. I mean, that's it. You got a clean level. You got to clean out. That's all you need. It's not about, for me, it's not about being right or wrong. If I'm wrong, which I'm going to be plenty, I just want to know that I'm wrong. I want to know quickly. I don't want to know in 3 months. I want to know tomorrow. Hopefully even today. You know what I mean? And this is one of those setups. By the way, can we just throw up slide 1 real quick? Because, remember this magnificent 7 nonsense? Like, I don't know who made that up. It's the dumbest thing I've ever heard. And how the equally weighted index and the S&P is not doing well. The equally weighted S&P 500 is making new 52-week highs, by the way.
I saw this yesterday.
Like, are you kidding me? Like, what are these people talking about with their magnificent 7? Get out of here. Dumb.
Well, they were the first. In fairness to them, they were the first to really go.
Who was the first to go?
The 7 stocks.
No, they were not. They were the last ones. What are you talking about? What are you babbling?
No.
Everything was working last year except for those growth stocks. Everything was working.
No. I'm talking about like in the spring or like the turn of the year.
Right. But that. They were not the first ones working. They were the last ones to get going. Everything else was already working last year. Everything was up in the back half of last year except those growth sectors.
Everything had stopped going down, but had they started to go up.
Yes, of course they were started going up. All these sectors were up double digits in the back half of last year. What are you talking about, Spencer?
All right, fine. All right.
You want me to pull up the math? I'll pull it up.
No,
here, hold on.
No, I don't. I don't.
Trust me?
Don't. It just because of the disproportionate weighting, obviously in the indexes, it just
on an equally weighted basis, just in the back half of last year, consumer discretionary was up 19%, industrials were up 19%, healthcare was up 15%, financials were up 14%, energy up 12%.
Isn't discretionary like Google and Amazon
on an equally weighted basis? And Google is on a communication stock. It has Google is not a consumer discretionary. But this on an equally weighted basis eliminates the Amazon effect. Like I said, everything was already working.
All right, you win this round.
It's not. It's just math, Spencer.
All right, real fast. Let's rip through a couple more earnings here. We had General Electric with a beat and a guidance raise this morning. Do we have that chart? I think we do.
This thing's a beast.
General Electric, a beast.
It's making new 5-year highs. Are you not entertained? Is that not good enough for you?
No, I mean, yeah, it's wild. I still remember when pre-split, the stock was like $6 or something.
Up another 4% today. It's on its way to 135, Spencer.
Yeah. I'm sorry, pre-reverse split.
By the way, I'm still really disappointed in you. When you and I went to Connecticut several months back, you had never taken the train to Connecticut. Like, what kind of Northeasterner do you call yourself?
Why would I have ever gone to Connecticut in my life?
Connecticut's cool, man. Why are you hating on Connecticut?
I'd been to Connecticut once or twice before. I've driven through it, obviously, to get to Boston.
It's not like you're from like Nebraska. Like you live in New Jersey. Connecticut's right there.
It's far with it's close as the crow flies, as far as the car drives.
So General Electric, Connecticut's own, right? I went to college in Fairfield, Connecticut, and had a lot of friends that worked at General Electric. A lot of their families, things like that. Strazza takes this one very personally,
He does. Yep. Okay, so that was the GE chart. Do we have the GM chart? This is also a good one. It was a beat, and a. Did they raise? No, I don't think they raised. But obviously with GM, every single conference call revolves around their EV unit and how that's progressing. So there's many comments this morning about, oh look, they're focused on profitability. Shocker. High rates.
Well, maybe they should for once. The stock sucks. They used to call these the generals, Spencer. When you were in diapers, they were the generals. You had General Electric and you had General Motors. They were like the market bellwethers. Now nobody cares.
That's true. I mean, GM had some momentum there for a while, as you can see. Really, you have to go back before 2022.
They should just sell it to Tesla. How big is General Motors? Go quick. What's the market cap of General Motors? Off the top of your head, don't look. What do you think it is?
Top of my head, 200, 150.
Dude, you're not even close. No? It's only $50 billion, man. This thing's nuts.
50 billion?
That's it.
Oh man,
dude, Tesla can take this. I mean, it's barely worth more than Twitter, right? What did they buy Twitter for? 44 billion?
Yeah, something like that.
All right, what's a few more shekels, and you can get a shitty auto company. You got a shitty social media company.
Look. GM makes more cars in like a day than Tesla makes in like a year or something like that.
I guess, but nobody gives a damn considering when you look at their market cap. Nobody cares.
Yeah. The big earnings mover of the day is F5 Networks, FFIV. This thing is up, or was up 10%. Now I think up 8% now. On their earnings report, which was a beat and a guidance beat as well. Actually, the guidance was in line. That's not that big of a beat. It was in line guidance. Anyway, stock's up 10%. This is the big mover of the day on the upside. And I wanted to also mention Raytheon. I'm sorry. Yeah, I know. It's a little blurry. Try it again. RTX, which I don't know if we have that chart handy, but this is why trading earnings can be so difficult, because RTX came out with a beat and a raise, and the stock is down 10% this morning. So riddle me that, Batman. I don't know.
Maybe it was already priced in. You ever think of that? That thing had been ripping for quite some time.
Maybe.
All right, Spencer, listen, I gotta hop. This has been a pleasure. Mike Zaccardi coming in here. I know Mary's waiting backstage. She's coming on. She's lovely. So you definitely want to look at her much more than you want to look at me. Spencer Israel, any last words of wisdom?
Well, you want to at least say hi to Mary? Wait. You should stay for a second.
Okay.
Stay for 1 second, and I'll show you why. Let's bring on Mary for a new segment that we're gonna call. What should we call it?
Everyone loves Mary.
Mornings with Mary.
I like. What's wrong with?
How would we call it mornings?
Yeah. Wow, that was really good. I like that. Mary.
Hey guys.
And at the end of the day, everybody does love Mary. Like nobody's like, oh, that Mary's a terrible lady. Nobody ever says that.
Thanks for the intro. I have not seen that. That's awesome.
Who shot those?
No one has seen that.
Did Giancarlo shoot those? No.
No, Carrie and Brett.
You're asking me?
Carrie, of course. Of course. All right, guys, listen. I rarely take an afternoon to go play golf. This is the third time I play golf in 10 years, Mary. How do you think I'm going to do?
I don't think you're going to do great. I'm not going to lie.
It's the third time he's played in 3 months also. So that's
True.
Slow down.
I hadn't played in 10 years, and now this is the third time that I play. So I'm trying to, it's summer, right? Go out there and try to hit some balls. I'm playing on like a professional course. Senior Open was there last year, so it's a hard, like the greens are impossible. So what's the over-under on what I'm going to shoot?
I know nothing about golf, so I
What?
can't even say. But you look the part.
I know nothing
so
about golf
I
either,
give you a
Mary.
10 there.
What did you shoot last time?
114.
Are you one? I was
Is
going to
that
ask if you
good?
broke 100. Okay, 114. Then we'll give you the benefit of the doubt. Let's say 110.
I 3-putted 13 times. That has to be a new
All right,
record.
110. 110. I'll give you
13.
I
110.
don't even know that's bad.
The greens are impossible. It's like putting on like ice. It's ridiculous, dude. The pin placement is criminal. All right, wish me luck. I'm out. See you later, Mary. Good to see you.
See ya.
Adios.
Damn crime. What's up, Mary? Should we bring on Patrick as well? We could have a little party without
let's do
JC
it.
here. All right, we got Pat Dunawilla here from the chart report, and we'll bring him on. The three of us will hang out, and that's what we'll do for the next few minutes. And then, who knows? Maybe we'll hop off early because if JC can do it, I can do it too. Strazza
Hey,
not
it's
even
summer here too.
It's summer here too. Exactly, Mary. Where's my Patrick intro? I'm in the wrong place. One sec, Pat. I'll get you on if I can find my computer's being awfully slow today. I really don't know why. Maybe that's a sign that I too should be outside. I don't know.
I think we should all take a vacation day.
Oh man, my computer's. I'm sorry. Hold on. Let's try this again.
That's some jazzy music. I'm not gonna lie. I like it. I
All
kind
right,
of started a
that
little
computer-
dance.
Yeah. All right. Pat, you here? He's here. Pat,
Morning, Pat.
Patrick.
Looks like a
Okay.
deer in headlights.
Maybe- All right, that was my fault. I think. All right, I think here's the thing. Pat is not at his usual house, so his internet is iffy. My internet today is also being weird, or at least my computer is being weird. Pat, give me a thumbs up if you're ready. God, JC leaves and the show goes totally off the rails. Pat's internet is. I see him. It's like he's using dial-up right now.
JC's never gonna let us be in charge again.
He's I see like every third pixel on Pat's face. In the meantime, Mary, tell us about what you've been trading. I know you've been trading. You've been active. What's going on?
Yeah, I do love trading. I'm kind of a junkie myself. So, obviously I watch the morning show every day. So I've been hearing JC pounding the table on energy. So I have started to watch that a bit more closely. I've had a long-term position in Exxon, so I always kind of have that on my radar, and added to my position in Oxy last week. So yeah, I think with some rotation into the commodities, that would definitely be healthy for the market, especially since we've had such a big run in the tech space. So I think, what JC has been saying, if we get some of that rotation, that's going to help overall indices and would certainly be healthy.
Wait, can I ask you about your what was it, the Hive blockchain trade from the other week?
Oh yeah, that was crazy.
This was you found yourself in a very interesting situation. So tell people what happened. You owned the stock for like a long time, right?
Yeah. So I started building a couple of different Bitcoin play positions around at the beginning of the year. I kind of had the bullish thesis that Bitcoin was eventually going to go. Hive blockchain was one that I put a little bit of money in, along with Riot and Mara, MSTR. Then one day, all of a sudden, and this was as the stocks were moving, just probably in about the last week or two, Hive was not trading. And I thought, well, that's strange. And it was halted, and started digging around for the news. And they had stopped trading pre-market for news release. And I haven't really exactly found quite what they're doing. They're moving into more of the AI sphere with NVIDIA and using their processors. I'm not a techie person, so I might be totally.
That's what the press release said.
Right. Yeah. So it was halted for an entire day. I couldn't do a thing. And as an investor, that's always very nerve-wracking when you've got your money stuck in a stock that you can't get out of. But luckily, the next day it opened up and it was running with all the other miners. And I sold a fairly sizable chunk of that position. Just, when a company kind of just changes its overall business plan, that's kind of, but I did
Right.
leave a little,
Well, yeah.
let it ride just because, if it goes to the moon, great.
And they changed their name too, and
Right.
and it's one thing to be halted for like yesterday AMC was halted on volatility for that's a 5-minute halt,
Right.
right? So but halted for news pending, it could be an hour, it could be a day, it could be a week. Like you don't know, you don't know when the stock will resume trading, and all you can do is just sit there and like wait.
Yeah.
Right? It's sort of, I imagine, I've never been in that position before where my stock has been halted for news. I imagine it was somewhat nerve wracking because you don't know, because that when it opens, it'll gap. You just don't know in which direction will the gap.
Exactly. And actually
Yeah.
the worst part of the whole thing was this account, it was in my longer term account. And so it was, when I went to sell it the next day, I actually couldn't. It was trading again, but where I hold my long-term holdings, that broker hadn't updated the new ticker symbol,
Oh, no.
or well, actually the ticker had stayed the same, but there was some shenanigans there where I had to actually call and talk to someone and have them physically sell it because
You had to literally call your broker.
Yes, it was crazy. So not only was it halted for a day, then when it started trading the next day, I couldn't even get out of it then. It was, stories of a trader, right?
You had to literally call your broker. I have never called my broker for anything. I wouldn't even know how. No, I probably would. Pat, you ready now? I think Pat's on new internet or a new computer or something. Give me the thumbs up if you're ready. There we go. Screw the intro. We'll bring him straight on. Pat.
Morning, Pat.
How's this working? Is that a little better?
Yeah, it's okay. You and me and Fonz, we're all having internet gremlins today, so don't worry about it. Do they not have internet in upstate New York?
No, I'm not sure what it is. As you mentioned, I'm traveling, so it's not my usual setup, but we're trying to make it work,
We're making it work. We're making it work. All right. Pat, what was your favorite part of the chart report from yesterday? I'll bring it up on the screen right now.
Yeah, sure. So, it was kind of a pretty boring day overall. I can't sugarcoat it too much. Pretty boring start to the week. But, I think the biggest thing yesterday, because people were kind of quiet, but I think the biggest thing, and I really didn't touch on it in the report, so I'll talk about it now, was just about how we saw the two biggest bears capitulating and kind of what that means, right? Spence, did you see the headlines I'm referring to?
Mike Wilson. JC didn't know who he was.
Regardless of who they are, just the fact that the people who have been persistently bearish are at a point where they can no longer continue being bearish, and they're going to have to change their stance. I think in some ways it is kind of a sentiment milestone for where we are in the recovery.
I agree, and I also if you can dance on his grave or whatever and point and laugh, but I think there's tremendous value in admitting you're wrong and changing your mind, and I would much rather have someone admit they're wrong and change their mind than never admit that they're wrong, right? So credit to him for saying, "Yep, got it wrong."
And I think that's definitely worth noting because everyone's kind of more poking fun at them, like, "Oh, why did it take them this long?" Well, at least they changed their mind, or at least they came out and said something. So I think they do deserve credit for that, even if it is a little bit late. But I called it a boring day. Energy got a really nice bid, led by a decent margin yesterday. Crude oil is just kind of firming up. I think it reclaimed the 200-day yesterday. So that's definitely one to watch in the near term. A lot of people have been talking about is energy and some of these cyclical sectors that really didn't participate in the first half. Are we going to see kind of a rotation into those? And so far for energy, you're kind of starting to see that. So that's definitely an interesting one. There was a lot of talk about the 11-day winning streak in the Dow, which, that is very impressive. It's only happened a handful of times. And the last time it happened was 2017. So this is, kind of a phenomenon that maybe you see once a decade. But in terms of like magnitude for an 11-day stretch, it's by no means the most impressive rally, as this chart shows, in terms of how much it's gained during those 11 days. About 5%, not nothing. It's certainly not down, so we can't scoff at it too much, but it's not the most impressive 11-day rally, although it is pretty impressive. I mean, over 2 weeks now without a single down day. That's pretty impressive.
Sort of indicative of just how differently these indexes move. If the Qs were up 11 days in a row, it'd be up like 20% or something like that. Something ridiculous, right?
Yeah. I mean, last week we saw the second worst day in the NASDAQ, and the Dow was positive on that day. So it's like, and that's, I think, exactly what you want to see. So much concern over how much the NASDAQ was leading by such a wide margin. And then when it corrects, you don't see this widespread sell-off. You just see a correction in those areas of the market. And that's really important from a longer-term bullish perspective. That sort of rotation is what can kind of sustain a bullish run for a lot longer than a lot of people expect.
All right, so Pat and I do the weekly buzz video every single week where we send out to the subscribers. We highlight some trade ideas from the buzz, and last week we highlighted Interactive Brokers. Mary, you told me that you've been getting down and dirty in IBKR.
Yeah, Strazza and I were talking about this a couple of weeks ago, and again with the rotation, back into some of those areas where we had seen some weakness. We were looking at IBKR, and I got into that trade. I got out of it last week just because of earnings, but I mean, it still looks great.
You got out before the report or after?
Before, okay. Yeah. I didn't have enough wiggle room to take it into earnings. So, I got out, but I mean, the chart still looks fantastic.
But that was the move, because it still hasn't come back to its pre-earnings level, 86 and 82. Right, so good trade.
Yeah, I'll take it's a win. I took a win. I'm always happy with a win.
And that chart does look good. Above 80, looks good.
Above 80. Yeah. Yep, absolutely. Still.
Would you get back in?
Yeah. I mean, it's on my watch list. I'm watching it to find a place maybe to get back in. Yeah.
All right. Did you trade China yesterday at all?
I'm in some China stocks. I was actually going to ask Patrick what he thought with,
oh boy.
We already got your opinion and your PTSD from, what was it, 2018? I'd love to hear
it was
more
like
about
it was
this.
like 19. It was like 19 and 20 and 21. It was all that. But yeah, I did buy KWAB like 6 years ago.
Okay.
And then saw like 3 years of gains evaporate in like months. But anyway,
Patrick, are you seeing some of China pop up on your scans, especially because I know you do the scan, kind of identifying what's happening on social media and kind of the mentions that are happening that are above and beyond.
Yeah, I think we probably will see that this week. That seemed to happen just yesterday, so you got a good eye. I think that'll probably continue. Maybe we'll see. But if it does, I'm sure it'll show up on the scan that I do, where we look for unusual kind of social activity. But a lot of those Chinese stocks, like KWEB and a lot of those components in there, that was a pretty big move yesterday. I mean, a lot of it like engulfed the prior 4 days. So pretty, that's definitely telling you something might be up there.
Yeah, absolutely.
And that area, it's one of those more speculative areas that hasn't really gotten this kind of recovery. You've seen the ARK stocks and the meme stocks and all these types of really speculative assets starting to get a little bit, but you haven't really seen Chinese stocks until, as you mentioned yesterday.
Yeah, they've been sideways for a long time, longer than most of the market. So, yeah, I'm watching Baba.
Sideways is being generous, but yeah.
It is kind of being generous, isn't it? I'm in Baba. I got in down around 80. I felt like 80 was a nice area of support. And then I am also in Neo and watching TAL. Again, that's TAL and VIPs. Those are two stocks that Steve and I throw around every now and then. We like to slack each other, ping each other when they start to look spicy. And so Those are the China names that we like to watch, or at least I like to watch, or are on my watch list. But obviously with China, I take a smaller position because obviously news overnight, and just like we saw yesterday, they can rock it up and they can rock it down. So, you just have to know with what you're playing with.
Yeah,
It does
absolutely.
seem like the Chinese stocks are extremely they're like always among the most traded stocks in the pre-market session. Like I wake up every day, I look at what's up, what's down at like 7 a.m. and what's trading, and like every day, like today, NEO, 4.6 million shares traded before the open, like by far more than any other stock, right? Like more than AMC, more than Ape, more than anything, right? 4.5 million shares traded just between 4 a.m. and 9:30, right? So and Bob is always on the list as well. Maybe it's a function of, again, like you said, China being overseas and that market being open while ours is closed. But I don't know, man. It just seems like every day there's like super active. There's just so much activity in these things at like 5, 6, 7 in the morning. It's just funny to me, like when I look at KWeb, like I bought it on the fundamental thesis that the Chinese economy is growing, and specifically they're coming online, like literally online, right? Like their country is getting on the internet. All the people are getting on the internet. Companies like Baidu and Baba and JD are growing every year, and that thesis was right. But just because the thesis was right does not mean the stocks have to go up, because the market, we like to say, it's forward looking, right? So you could have been absolutely right about Alibaba's revenue and Baidu's revenue growth and all that fundamental stuff, but you could have been wrong about the performance of the stocks. So that's just the way it goes sometimes. Can I complain for a little bit second? Like I have this like first world problem.
Let's hear it.
I noticed.
You've got the
I
mic.
noticed it. I noticed it. I
Literally.
noticed it yesterday. So how Twitter changed its name and logo and all that stuff.
Yes, I wanted to
So
ask you guys about this.
So I have like 500 tabs open on my computer at all times.
I like where you're going with this, because I think, yeah, go ahead.
Right. And so when I want to go to Twitter, I look for the blue bird in the logo in the corner of the tab. But now the blue bird's gone, replaced by an X, and I don't know what that X is, and it's unfamiliar to me. And I'm like, what is this X? Why is it open? Close this tab immediately. I don't know what that is. And then I go to find Twitter, and it's not there, right? So now I need to get used to it. My eyes have to like adjust to this X I've been using. We've all been seeing the same Twitter logo for whatever 13 years. I've been on Twitter since 2008, 2009. And I hate it. Can we go back to the bird, please?
Believe me, that tripped me up yesterday so much. Like you said, first world problem, and it's small, but it does mess you up a little bit. Your brain is used to seeing that little blue icon. And then for me, two of the other websites I use probably most are TradingView and Koifin. And before this, I always had a problem with, they were both black and I would always get them confused. Now I got three that look exactly alike, and it's just, I don't know. It's going to be a lot to deal with.
Yeah. Yes. This is our strife.
Yes.
I don't really have any. Mary, do you have opinions on the X thing? I don't know.
I don't have opinions. I was actually just going to. So, you guys know I'm a mom of 3 with 3 children home for the summer. And so I knew that it had happened. I just didn't really know kind of the philosophy behind it, or what was driving the force of changing to the X. I was just curious if you guys knew kind of what prompted the change. And here's a hack for you. I put my Twitter, because same thing. I couldn't find the bird. I put my tab all the way to the left, so I always know if I go to the very far left, that's where my Twitter is.
I have other tabs that are also a priority, Mary.
Fair.
They can't all be to the left.
Then you put one all the way to the right. You at least have 2 options.
Yeah, maybe. Maybe it's more important than my email. I don't know. But no one understands what's happening. You know what? I was thinking about this the other day. I do miss Twitter being public, because by the end of it, I was so annoyed. I was so tired of the stock. because it got way disproportionate amount of news coverage and attention than it deserved, than for what the stock actually did and for the size of the company. But I actually miss it. I would just love to see how the stock would have behaved in the last whatever few months it's been since Elon actually bought the company. And Dandry says that TweetDeck still has the bird. I had to give up my TweetDeck because I don't think I really want to pay for it. So maybe I will pay for it. But I haven't yet. Therefore, I'm out of TweetDeck, which is a bit of a bummer.
They don't have a free version, or did they start charging all of a sudden?
No, they started charging for it.
Oh,
TweetDeck
wow.
is now paid only, as it probably should have been the entire time. I've been using TweetDeck for like 10 years, and it's a fantastic tool.
I mean, they messed up by not buying them in the first place. Twitter should have bought TweetDeck as soon as it came out.
No, they did. TweetDeck is Twitter.
Oh, it is? Oh, okay.
Yeah.
Oh,
TweetDeck is Twitter's thing. They just never charged for it. And they should have been. But now that I have not been paying for it for a decade, I don't really want to pay for it. You know what I mean?
Oh, do you see Wavy's Wavy McFly's comment? It's X because the parent company was 90.
Yeah. So the parent company, company's X, and the logic is that it's going to be like the everything company. It's going to be like Twitter. It's not going to be just posting tweets or whatever they're called now. It's going to be it's sure. Yeah, it's going to be the the ultimate bank disruptor, and everything you can think of that they're going to do allegedly.
Yeah,
so
I keep hearing it as a fintech play, and I'm not sure exactly what the vision is there, but we'll see.
Yeah, I have no idea what the vision is there. I don't think anyone knows. Maybe he knows. I don't know.
I saw a couple of posts on Twitter about the trademark issue, and I don't know who can trademark the letter.
Oh,
X.
because in was it in the UK? Oh no, Microsoft. No, Microsoft.
Right.
Microsoft has the X trademark. Yeah. I don't know, and they have it from like a long time ago.
That was my thought too, Mary. How can you trademark a letter like that?
Takes me back to
also
my
US
Sesame Street days. Like today's letter is
US Steel. US Steel has the ticker X.
Right.
How's that going to work if X ever goes public? You know.
Right. I saw someone yesterday because X was up yesterday. So someone was like, I wonder if this thing's getting a sympathy bid right now. But
dude, that happens more often than you might think.
I know.
I think RH probably moved a little bit with Robinhood.
Yep.
Oh, sure.
And also Ethan Allen. ETH. Yep.
Ethereum was taken off. Yep.
Yeah.
Ethan, and then my conspiracy theory is that Fiat Chrysler, when they changed the name to Stellantis, they did that so they can make their ticker STLA. So if you ever tried to type in Tesla but you did it wrong, maybe you got STLA instead of TSLA.
Interesting.
And then there's also a TLSA stock, which has done some wild stuff.
APTL or something like that.
TLSA has done some wild stuff. If you look up that chart, it's been a while. It's very small, but yeah. Anyway, super low float, nano cap, less than $1, but don't buy that. It's crap. Anyway, what else do we have here? I don't know. I think I've exhausted.
What are you watching, Patrick? What has your eye?
What am I watching right now? Like I said, energy stocks is a big one. And then some sectors that really haven't participated, healthcare, financials for sure, especially with what we saw with regional banks last week, really nice comeback. That helped the Russell too. So definitely looking for more outperformance from the Russell. It's tried to stand up, and every time it's done that in the past, this year or so, it's fallen right back down. So we'll see if this one's for real. So small caps, financials, and then some of those other sectors. Real estate's another one. I think from a sentiment perspective, real estate has really just been left for dead. A lot of the problems in commercial real estate and stuff, and you're starting to get the magazine cover on some of those issues. So
yep.
I think real estate is kind of an interesting one because it really hasn't participated. So all those sectors that really haven't done much in the first half, I think you really got to look to them in the second half and see if you get kind of a pickup there, kind of a catch-up trade.
Is XLRE, is that mostly commercial? I feel like it is, right? It's probably got to be.
I'm not sure that's a really good question, what the breakdown is between like commercial and residential within there. That's a really, really good question.
Let's look at the top holdings right now.
And it's one of those sectors that really doesn't get visited that much. Like I couldn't even tell you what some of the larger components within it were.
Well, there's O, which is I think the largest. No, it's not the largest. I thought anyway. Purchase, PLD, American Tower. So that's commercial. EQIX, Crown Castle, Public Storage, which I guess is commercial. Realty Income. That's ticker O. So yeah, it does look like it's mostly commercial. There's a couple residential ones on here, but it looks like it's mostly commercial. So I don't know. I can't get excited about commercial real estate right now. Maybe if rates came down a little bit. Speaking of rates, what's today, Tuesday? So we do have a FOMC meeting. We have an FOMC meeting today and tomorrow. Probably going to raise rates tomorrow. I guess for the last time. We'll find out. I have to confess, I don't really care. I only care in that the market seems to care, but I don't actually care. You know what I mean?
I'm with you there.
Pretty much.
Those days I tend to just kind of zone out all the noise those days. It's tough, but
yep. I agree. All right. I think that'll be a good place for us to wrap. Guys, we are doing a Twitter Spaces today at 11 o'clock right now.
11:30.
11:30.
Yeah.
I always get that wrong. 11:30. So an hour and a half from now on the Chart Report Twitter Spaces. So stay tuned for that. And then Patrick and I are doing CRL, Chart Request Live, at 1 o'clock. Normally it's JC, but obviously he has golf balls to hit. So it'll be Pat and I at 1 o'clock right here, Stock Market TV. Stay tuned for that. And that's it for the programming schedule for the day. So thanks to our guest, Mike Zaccardi. Thanks, of course, to Kimmy, Pat, Mary. By the way, when we say call Mary, this is who we're talking about. We're talking about her.
Me.
So if you ever want to call Mary and talk to her about any of the products that we offer, anything that we have that's just for members or subscribers or any premium offerings, you can do that. I'll put the number up on the screen. There it is, 323-421-7910. She's got all the deets. If you just are curious or if you have a question about your subscription or anything,
Or call and talk stocks.
Or just call her and talk stocks.
I talk all of the markets.
There you go. That's it. Numbers on the screen. All right, guys. Thanks a lot. Thanks, both of you. Thanks to everyone in the chat for hanging out. Hope you have a good rest of your day. Go make some money. And see you guys later. Have a good one.
Bye, everyone.
Thanks.
I can't take no loss. I don't even know what it costs.